Good morning and welcome to today's edition of Toggle's Daily Video Insights. Happy Monday. My name is Jan. I'm the CEO and co-founder of Toggle. And if you like these insights, would like to see more of them, please subscribe to our YouTube channel or check us out on toggle.global, where you can also see and test drive our Toggle Copilot, the first intelligent investment dashboard. Now, today the focus is going to be on a company called Watsco, which is the largest distributor of refrigeration and air conditioning equipment in the US. Probably not something that you really think about that much these days when it's cold on the East Coast, but obviously relevant for much of the year and most of the rest of the country. The analysis today is going to focus on a very specific kind of technical analysis indicator. It's probably not something that many of you more fundamentally minded investors look at, but it's a KD stochastic indicator. And in this case, it's saying that the 3-day versus 14-day spread just crossed below zero. Now, historically, in this particular case, based on 23 similar occasions that Toggle has looked at, this has meant a rally of just over 3% over the following month. And so what you can see here is, in addition to the starting price, you see that the median projection would see this rise to about 244.62, and below 229.40, you would assume that the odds of the paradigm still being the correct way to look at the current stock price moves would be substantially diminished. And this is where many traders typically place their stop losses or therearound. The worthwhile fact to highlight is that this indicator has successfully highlighted rallies over the past 20 years in this stock. So as you can see here, we have the episodes going all the way back to the early 2000s, and about 81% of those days resulted in an upward move over 1 month horizon. Again, you have to remember that the way we typically present these studies are in terms of the median return. And so 3% is really the least that the stock would have done at least half the time. But obviously the range includes results that could be quite a bit more than that. And this is where you would normally look at our last chart, which is the back test and the risk management analysis. And as you can see, the convexity of the trade is quite good because the losses whenever the paradigm did not apply, so when you've had the drop below the red line as we show you above, you would have lost well shy of 5%, but there were cases where over a month you would have made well north of 5%. So just something to keep in mind as you evaluate the trade. So much for the company in the spotlight today. In the daily brief, we also discuss the meaning of potential delays of the current fiscal stimulus bill and the signature by the president. If you have an interest, please check it out. Again, you can subscribe at toggle.global. Otherwise, subscribe to our YouTube channel, and we'll always give you at least a little bit of a hint as to what the daily brief is about. Thanks for your attention, and we'll talk to you again on Tuesday.